Wealth Wisdom Financial Podcast, YouTube, all of that. I'm doing some tests here. I am literally just decided to go live with my friend here and just be here and talk and see who shows up. We're going to have a great conversation. It's 3:10 p.m. on in November. So who knows who's going to be here, but we just decided, hey, let's go ahead and make this live. Let's test it and have a great conversation, me and him. But invite some people to listen in, chat, comment, do all the fun things, and just wanted to, have you guys along for this conversation, kind of like being, I don't know. Listening ears. So today I get to interview and talk with Patrick Grimes. He is the founder and CEO of Invest on Main Street. This is the reason, as you guys know, we used to own a coffee shop, and we're all about Main Street, not so much about Wall Street, right? We love the Main Street and the small business approach. So that's why I like him being on the show and what we can talk about. He has a private equity firm with a mission to enhance busy professionals' quality of life by providing tax shielding and inflation hedge passive income and wealth building investments. Again, you'll see as you listen to our channel, you'll see why I thought it was a really fun to have him on. He comes from 14 years of experience in active real estate investing, purchasing distressed assets, renovating and stabilizing for long-term cash flow. Again, one of those key words, cash flow. As a syndicator, Patrick has raised $200 million from his network of passive investors to accumulate a $600 million portfolio. That's a million, with 400,000 units in multifamily apartments, communities in the emerging market across Texas and southeastern United States. Patrick is also a co-author of Amazon's bestseller, Persistent Pivots and Game Changers, and on the Forbes Real Estate Council. He writes articles on investing and commercial real estate and contributes to Forbes expert panels. A leader in high-tech space, he contracts to design and build one-of-a-kind manufacturing, automation, and robotic systems through his other company, Protomation Systematic LLC. And I'm going to keep going. I keep going with stuff, but I just figure, you guys know he sounds amazing, and I could say all kinds of more stuff, but we just want to have him here to chat. So here we go. Hey, Patrick, thanks for joining us. That was a mouthful,
Glad to
man.
be here. Yeah.
You've done a lot of crazy stuff here. That's awesome.
Well, I didn't think you were going to read out the entire bio there, but I appreciate the kind words. Glad to be here, Brandon.
Yeah, Patrick, you are one of those people that I feel like aren't just talking about doing the stuff. You actually have done the stuff. So as you're talking to people, as people are listening to this, I've been thinking a lot about, there's a lot of people who I call entrepreneurs, or they want to have this life to the fullest or whatever. But they get in their own way. They want to be where you're at, and they just don't know where to start. So how do you help people start getting out of their own way? What are some of those roadblocks that you've seen over and over and over again that you're just like, oh my gosh, here we go again. Here's another roadblock. Here's this, that you get tired of telling people, that you have to tell people right now?
It's interesting you say that. Just a couple of weeks ago, I was having a conversation with, because I came from a machine design, automation, and robotics background, and somehow maneuvered myself into being full-time real estate and then a private equity firm, which I think those are big leaps from one to do-it-yourself real estate guy to then a financial institution, right? Those, and I was a lot of self re-identification. I mean, I had identified as an engineer since basically I was playing with Legos as a kid, right? And And when I grew up, I went to engineering school, started with robotics, was a huge nerd, loved it. I'm still a nerd today, but don't grow
Yeah,
out of that.
right.
It just shows up in different ways. And I remember when, I was advised early on, invest in real estate as soon as you can and as much as you can. And I was like, but I'm an engineer, high tech. Like, no, you're not going to afford yourself and your family the future that you want. So you need to do this. Like, I started re-identifying to some degree then and trying to, moonlight real estate.
Yeah.
And it was two very different worlds. And ultimately, the roadblocks that I ran into was, that analysis paralysis, over analyzing, engineer huge safety factors or conservatism that made it very hard to make a move.
Hmm.
And it took a while, and then ultimately to where I finally started making moves, and it started working. But then I
Hmm.
didn't know how, right, to really partner up. I was kind of doing it all myself, and that was
Yeah.
a whole learning to trust and rely on others and other people's money to scale. Those are all big personality and shifts that I had to undergo.
Yeah, so I see that all the time, and people want to be. I think about myself as a business owner. I used to own a coffee shop, right? And
Mm-hmm.
switching from coffee to what I do in the financial services world, I was like, who am I to talk about money? I'm a coffee shop guy, and it was a really hard to switch from this coffee thing to wealth, wisdom financial. I'm like, really, who am I to say that? I just
Mm-hmm.
opened and sold the business, so I can totally relate there. So, and I can also think about, these people who are listening. Maybe you've been 18 years into this, you've been moving into that, but looking and saying, okay, as a business owner, as a person who's starting, maybe we're like kind of like babies. uh, how do you help people think about the next step? What are some of those obstacles that you see, um, as you've explored those and seen those? What are some obstacles that you say, all right, here's the thing that they need to avoid?
Well, so first of all, I I run every morning, and I think that's been helpful because I listen to a lot of self-help books. And
Nice.
if you say mindset to somebody that has a mindset problem, they don't understand what that means. They don't know what mindset is. So as far as a mindset problem is concerned, for a person who has a mindset problem, you don't know what you don't know. And so,
Right.
I mean, the first thing I'd say is, before you can overcome a stumble, you got to know, before you can overcome an obstacle, you got to know it's an obstacle. And I think it was my running to podcasts, running to self-help books, running to personal growth, and attending and conferences, and constantly surrounding myself with people that were the next step, and then seeing my limitations along the way and working through them. In fact, even in my real estate career, I never got my name out there. Just it's been only been a couple years, and I had already over 100 million and over 2,000 units before I ever did a podcast. So this is,
Yeah.
just getting myself out of the grinding wheel, right, and getting my out of the hobbit hole, and getting out there in front of people and giving back. That was all personality, but I didn't realize that was a problem until I started talking to other individuals. And then I said, well,
Mhm.
I'm an engineer, I'm an analyst, I am not this, I am that, right? But the reality is, I was on the other side of that. I have a lot to share. Now I travel and I talk on stages and advise people on passive investing, wealth building strategies. And I get a lot of feedback there. I really appreciate it, because I went through a journey of being a working stiff, and
Yeah.
that valuing that, and how my journey of having lost it all once, building it back, and then scaling, that's valuable to people, and it contributes to their life. And so probably, just first of all, the awareness, investing in the necessary self-help, and then realizing that you're holding yourself back is actually also not servicing you. It's also not servicing the people around you.
Wow. Yeah, I think that is huge what you just said. Like, putting, what they say, you're the five of the people you spend the most time with, right? And even just listening to podcasts, that self-awareness. oftentimes is not there.
Mm-hmm.
And to be able to be self-aware, you were putting yourself in places that helped you become self-aware, even though in a lot of people's eyes you see you made it, right?
Mm-hmm.
But you're still growing and continuing to build, even though, hey, you've done it, and again, already beforehand, great work, but you're still saying, hey, maybe I'm missing something.
Yeah, well, I think that complacency is the big thing in that, because at each step of the way, I could be like, oh, I was successful at something. You were successful at a coffee shop, but is there continuing to grow from there? What's the next
Yeah.
step?
Yeah.
There's a couple of things that I'd probably add to that. When I started in single family, I wanted to do it all myself. I
Yeah.
wanted to find the deals, renovate the deals. I wanted to manage the deals. I wanted to refinance out and reinvest and find another deal. And I was doing a high-tech, very successful career where I needed some place to invest. But that sense of control and wanting to manage it all and do it all, I was trading time away from my family, friends, and hobbies. And it took a while for me to realize that that sense of I'm very successful at this, let me keep doing it myself, was at the trade-off of me having a fully balanced, fulfilled life. And it wasn't until I met my wife, that my soon-to-be wife at the time, that I closed on my last single family deal. And then I said, look, I'm not doing this anymore because I want to focus on you. And then we got married and we have a kid on the way. But had I not, and then after that, thank you. After that, I learned, it took me 2.5 years to pause and then learn how to scale through much larger multifamily where I could rely on partners. And that was tough because in order to serve the next level for my life and my family, I needed to learn how to partner with others both for capital and to partner with others both for their experience. And my very next deal was 86 units, 2.5 years later, though. And that's probably the next lesson is people looking for that instant gratification. I'm convinced the tortoise will outpace the hare. And that's actually on my decks. And I always talk about that. But lots of partners I talked to would spend months trying to negotiate, what's the partnership roles, who gets what split of what, when there's no deal there. And and my first investment, I had no idea what partnership percentage I was getting, how I was being compensated until after it closed. On my second investment, I had no idea what I was doing, what I was going to get. And so I was just there. I mean, maybe it comes along with being an engineer, but you suffer for like 4 years through the trenches in engineering. Talk about delayed gratification to actually get a job, right? But you've got to really treat it like that. Like I told my wife, I have 2 master's degrees, by the way, business and engineering. I felt like getting into multifamily from single family, where I learned to partner and where I learned loans and private equity and capital raising and syndication. I feel like that was the 3rd master's degree, but the one that actually mattered to our future. And so I was willing to put in the time and the years, but just that determination to make it work. And that's probably there's a big washout in the space because not all the people believe at the end of the first year they can do it.
Well, and you said again that the tortoise beats the hare. I think I spelled that wrong, but this is the thing I think about with what I do with the infinite banking strategy and what I've been building is building those foundational pieces, right? And a lot of times and this is why I think our world is a little bit upside down, is because we've been chasing rate of returns, we've been chasing this, and our pyramids are upside down. Whereas you're saying, hey, I want to build those foundational pieces, systematically add them in thoughtfully, and have the right people in place that help me do that versus, hey, let's chase rate of return, build these all deal structures, and no deal to be had. And you've wasted all of that time and energy on something that didn't actually happen. Am I putting words in your mouth, or is that about fair?
No, yeah, absolutely. It is. I mean, I think that a lot of people are trying to leap to wanting to get into a deal. Well, they haven't learned how to analyze deals. They haven't learned how to properly structure deals. They haven't gone alongside with somebody, put in a bunch of efforts, flown around, walked through a dozen different apartments, and worked with others that are succeeding to see how they do it right. They just want to leap to the finish line. And talk about building that pyramid, that foundational. And I happen to have an emphasis in systems engineering, so that really does. Automation and robotics. I am the systems guy, right?
Yeah.
And I lean on that because if I can get the systems together and they're repeatable, it helps me get through that analysis paralysis. I'm very slow to partner, very slow to move, but once I move, I know I've got the systems to be successful.
Yeah.
And that's kind of, I definitely can relate to the pyramid analogy.
Well, I think it's like, as I'm building and thinking through this, a couple things I've learned is, man, I've bought my house, right? And I used my policy to buy my house. I had a flood in my coffee shop business, which sucked. I had a flood in my basement at my house, that kind of sucked. And then, buying a commercial real estate building, I've realized, I don't want to have multifamily or some of that stuff. I want to I've learned what kind of investor I want to be, and also learned what I like and what I don't like. I'm not good at hammers. I'm not a techie or in that kind of way person. So sometimes we feel like we're supposed to do this because, Airbnbs. Well, it sounds cool, and we get into Airbnbs, and then we get into something else, and then we get into something else. How do you stay focused on what your strength is, and how do you help other people as they are coming into your orbit and they want you to do this or that? How do you help stay focused in all the things? All the
It's funny
one
you say
thing.
it. Again, once I literally, the call before this started that I hung up with, he was asking me about all these different deals that are out, and they're like, what about this? What about? I'm like, hey, look, I am laser focused in what I do. And it comes because I'm not a ready, fire, aim guy. I'm a ready, aim, fire. And well, what you don't know about me is that I started back in 2006 and 2007 in real estate.
Mm-hmm.
I invested in a pre-development because at that time I was trying to put my earnings from the engineering career into what I consider to be very high returning deals. I did do some research. They had a good track record, but I wasn't so risk averse back then. And I personally guaranteed the land loans, and in 8, 9, 10 happened. Everything flipped upside down, developer, everybody went bankrupt except for me. I actually was able to hold it together, but I paid for a couple of years, negotiated debt forgiveness, and then came out of that. And after being raked over the coals, paying taxes on the debt forgiveness, it was really brutal because they weren't going to let me off the hook. And that humbling experience early in my real estate career, while it kind of drew me back into high tech for a while, and that's where the master's degree came in, I learned about being very careful and cautious in my steps. I learned about how the economic models can break down, how the demands can shift. And I learned about recession resilient markets. And I learned about how you can structure deals with low leverage so that you can allow for vacancies. I learned how you can buy cash flowing objects on day one. That cash flow even in recessions, workforce multifamily. And I learned how to structure non-recourse debt deals, buying deals that are large enough, that push off enough income, that are low risk enough where even the lenders will give you non-recourse debt because they'll collateralize it by the asset. And so ever since then, I've been making very careful, calculated moves into the right markets, right communities, and the right cycles, and the right kind of assets that cash flow on day one, leveraged in a way where we can tolerate the vacancies we've seen in recessions during those times. And to your point about the flood, we're well insured for replacement costs as well as loss of rents. And we keep 6 months worth in reserves on the sidelines in a capital reserve account. So we're first in line in the case that we do have a tornado, a flood, or a fire, which has happened. We can be first in line to rebuild while we exercise our insurance policies. And so that's how I resolve concerns of my own. And quite frankly, the distressed deals we find, are all people that weren't following those basic principles. They didn't have low enough leverage. They couldn't tolerate
Yeah.
the vacancies. They didn't have reserves. They didn't have the insurance or a combination thereof. And we bought a distressed asset, and it's a great opportunity for us. So people are learning those lessons, and we find some of those deals, but that keeps me in really two specific investment strategies, and both multifamily and diversified energy.
Well, and that's something I'm curious, as we're going into some of this recession. Maybe we're in a recession, maybe we're not in a
Mhm.
recession. I don't know. Who knows? You depend on what news you want to listen to, um, right? Where do you think some of these people, as maybe we do go into something, where do you think some of this is going to lead? Do you think a lot? I mean, a lot of people, I feel like, in my opinion, have not built a good foundation, right?
Mhm.
And we're about to see some interesting situations, uh, possibly. Where do you think that's going to lead us, and where's that going to lead Patrick and Invest on Main Street?
Well, so probably answer that, and there's a lot to say on these topics, right? And
Yeah.
they're complex topics, but I could say a couple items which I think help to address that. First of all, I've been structuring deals since I lost everything in 2009 and 10,
Yeah.
as if every year was 2007. Because in 2007, they told me the market was never going to go down. Leverage it to
Yep.
the hilt. You double your money every couple of years. Do that for the next 12 years, and you're retired, right? Then I realized that's not the case. Let's build in the resilience and the modeling so that you can survive a 2008. The reality is, the perception, I think, within investors, passive
Mhm.
and active, is that they have to have the best returns on the market. That's the belief, right? Because any deal, if it's a cash flowing multifamily deal, you can do it low enough leverage. You can get fixed debt. You don't have to have
Yeah.
variable interest rate. You can have reserves on the side. But what does that do? Well, first, you can find a really good deal, but that lowers your return slightly. And for some reason, sponsors or people that put together deals, they have this perception that they have to have the highest return. But that's not the truth. If you find the right investors that realize the tortoise will outpace the hare, that are looking for capital
Yeah.
preservation, I can put structured deals 15 years ago, 10 years ago, 5 years ago, and today, all that will weather a recession. And those investors will appreciate it because our returns have been astronomically high because we're projecting as if we're about to go into a recession every time. And so now we'll meet pro forma maybe for a couple of years, but then the market will return. And in the deals that we're closing today, we're buying it from all these distressed operators that interest didn't cap their interest rates, that
Yeah.
didn't have the reserves of the. So these are amazing times. Right now, we have an asset. We got 5.25 million discount. We would have never been able to get that in Atlanta, of all places, where there's 10-year year-to-year rent growth a couple years ago. I mean, the deals are amazing. It's finding the right kind of like-minded
Yeah.
investors that will ride that journey with you, that are the long-term wealth and not the quick win. And I think that's what is the difference on the real estate side. And there's potentially a different conversation on the energy side.
Yeah, I think you're totally right on that, with the real estate and just thinking through that and seeing, right? I think there's going to be some people who have been trying to get this quick fix, and that's kind of what, is put in our system sometimes, and told, right? That's why I liked, when you said invest in Main Street and not Wall Street, because the Wall Street model is fast, and the math actually doesn't actually,
Mm-hmm.
prove it.
Exactly.
Um, and I look and I say, well, averages don't mean anything. Some of this stuff does not mean anything. Invest, like Robert Kiyosaki, for cash flow. Um, and but yet we're told, everybody's told, put everything into the market, and it'll all work out. Don't worry about it. Don't look at it. Um, and what you're saying is, hey, and why, again, why I love infinite banking, why I love building the stability foundation, is because honestly, I know, with what I'm doing on my side, and then in working with people like you and others who are the, not slow but methodical people, those are going to be amazing people to work with and to help our clients weather whatever storm happens, because there will be another 08, 2023, or whatever we're going to call this next thing.
Absolutely.
There'll be more and more. One of my friends said, his name is Perry Marshall. He does a lot in 80/20 rule, and he said there's a lot more black swan events coming, and you know that's true, right? So how do we best position ourselves for that? Now let's talk. So you said something about real estate, but it's a little different in the energy space. What's the differences there?
Well, you said, what does this kind of economic condition mean for Invest on Main Street? And I think on the real estate side, it's business almost as usual with slightly different modeling and different debt structure, a little bit different. But on the energy side, we're offering diversified energy portfolios as well. I happen to come from a background, my family collects energy royalties, so from generationally, and so there's an exposure in my life. Now, most individuals can't just jump out into real estate like you can just go buy yourself a rental property. I'm sorry.
Yeah.
Most individuals just can't jump out into the energy and dig a hole in the ground to try and do oil and gas drilling like you can in buying a rental property. And I don't advise you do that. But the interesting thing about energy right now is that all markets are cyclic. And a lot of individuals like yourself say, oh, I mean, not like yourself, but a lot of individuals that come to me, they say, oh, I'm diversified because I have, of course, my 401k and IRA maybe in the stock market, but they have multifamily rental, vacation rental, they've got maybe a commercial building, I'm like, well, that's not diversification. That is real estate. All that is real estate. And if you look over the history, and if you look at my passive investor guide at investonmainstreet.com, see the passive investor guide, it's a free guide.
Yeah.
Like the third slide on that shows the diversification of the middle class, the high income earners, and the ultra wealthy. And in alternative assets, there's a 7%, 15, or 25, and 50% percentages in those. And that's important to know, because to truly invest like the ultra wealthy or the high income earners out there, you need the ability to identify and find these delinked alternative assets in real estate and private equity that follow different cyclic markets. And so that cash flow and are also tax advantages. Now, the diversified energy portfolios are exactly that.
I think that is what is super powerful. Like I've thought about this. If you said you're diversified and they're different assets, but they're all in the same truck and it goes off of a cliff.
Yeah.
Well, then you're not really diversified. I've heard that before. Oh, I'm diversified in these different kinds of real estate, and I'm like, you're in all real estate. And again, why I like the life insurance piece is it's a non-correlated asset that I'm able to use to then maybe diversify in real estate, doing a syndication with you, or energy, or things like that, and truly non-correlated assets. So that way, when things do go crazy, if they do, and we say it's a diversified portfolio, well, is it really?
Like right now, real estate cash flow is going down. Interest rates are going up. Values may stall. Valuations may stall for a little while. But right now, you'll see energy futures are bright. Cost of energy is high. EU is pulling back from Russian gas, and OPEC is dialing down production, and we're headed into winter. In the last 10, 15 years, this is potentially one of the best times. Like how real estate goes under market cycles, it's probably one of the best times in the last 10 to 15 years to invest in direct oil drilling in the United States. And not only that, you talk about the correlation right now, you see our cash flows are awesome in the energy side, but the United States government, they incentivize energy, housing, and food, because unlike Russia and China, those are not state-run. They rely
Yeah.
on the private sector and individuals like us. So while you can get tax advantage from real estate, which are incredible, it's actually better on the energy side. In fact, most of our investors that invest, especially this time of year, heading towards December, they're doing it because usually 75% of their investment comes directly off their adjusted gross income. That's
Wow.
almost like,
Well,
yeah, in the first year, and the rest comes in the following year. But that's like Uncle Sam saying, hey, look, if you put 70 grand into this deal, I'll give you 30, and you'll cash flow off of 100, and you'll get an exit of a 3x off of 100. Or when you put in 100, when you file your taxes, I'll give you an instant rebate of 30 of it back. Right?
yeah.
I mean, that's an incredible return. Like on day one, instead of paying the taxes to Uncle Sam, make some money on it and put it into these
Right.
deals.
Well, and guys, as you're here, if you're listening to it, I see people are watching. Put it in the chat if you have a question about real estate or about energy. Put it in the chat. Love to engage if you have a question, or go and reach out to Patrick too. So something I've been thinking a lot about is a lot of you. I was just at a real estate investor group, and we again say, oh, I need to do this, or even just different. I don't know. You're in the real estate market. Not all real estate is the same, right? So you're doing Airbnb strategy versus buy and hold property strategy versus fix and flip syndication. What would you tell people as they're thinking about this? They may have built their foundation. They have a good life insurance policy set up, and now they're ready to take it to the next step. What would you tell them they should do second, because they've already built their foundation? So that's first. What would they do second
Yeah, I
to
think
grow their wealth?
a lot of our investors come to us with it's qualified plans like an IRA or 401k, that maybe an infinity baking plan. And they're saying, hey, look, I need to diversify it into assets that are non-correlated cash flowing and for appreciation. That'll give me the inflation hedging and long-term wealth building that I need. And then we'll help them, you can roll part of those off into IRAs as 401ks as self-directed. And then we can assist with investing those into our deals. I think the other way that people come to us, and I mean, like I said, if you look at my passive investor guide, it helps to guide how to diversify in alternative assets or alt assets. And we can provide a little bit on just studies that are out there, but also single family. You mentioned I used to be a single family guy, trading my time, family, friends, and hobbies away for moonlighting what I thought was success, which was I want 40 properties because then I could retire. But then I realized the journey to 40 is brutal, and doing everything myself and trying the deals. So what I started doing is 1031 exchanging up to larger multifamily deals. And I'm one of the fewer syndicators that has both securities issuing for the syndications as well as tenant in common 1031 exchange accommodations for do-it-yourself landlords. And so we'll help individuals. I've got articles in Forbes and I got on my website. If somebody's out there, hey, I've got 1 or 2 or 3 rentals, I would love to get them out of my neighborhood that's not landlord friendly and that's a pain for me to manage. I'd rather put those in the fastest, best growing markets in the country that are tax advantaged into great deals. And I would rather have you fully manage it, raise those rents, get my capital back into refi, and then put it back into another deal and keep that velocity of capital high. And I can go enjoy my family or go enjoy my retirement.
I think that is a huge thing. You just said find the right people that understand those things. Basically, find a guide or a coach or expert, and work alongside those experts. That's again part of thinking about us. Is I'm an expert in one thing. I'm a heart surgeon in that area, and I know that very well. But I know I'm not going to be a expert in that. But I've heard people say, when I do financial analysis, well, I'm going to get 100 doors because that's going to give me this, and I already know how that's going to play out. Because I've heard stories like yours and other people, and I'm like, oh man, that's a hard road. How about you do this? And they have to figure it out on their own, I guess. We all have our own story, but um, yeah. Can I share? Can we share your screen? Is there something you want to show us?
Yeah, yeah, I'm happy to share whatever you'd like here. I think you were wanting me to talk a little bit about our investments. Let me know if you can see it.
Yeah, let's do that there. And again, guys, if you guys have questions, if you can see it, hopefully you can see it there. Um, but this is Patrick's website. Can you tell them the URL for the site?
Yeah, this is Invest on Main and then Street. Invest on Main Street, all spelled out.com. And want better returns than Wall Street investment apartment communities. We currently have an investment open in Atlanta, which just happened to have 10% year-to-year rent growth, landlord-friendly, tax-advantaged, and we got it at a crazy discount, like we were saying. So we can share some information. We have a lot of great content on here, investor testimonials. I write for Forbes. I've got a lot of good articles on doing 1031s, how to use your retirement accounts, asset protection. I speak on various events and stages. And if you're interested, go to investonmainstreet.com/book, and I'll give you a free copy of this here. This is Persistence, Pivots, and Game Changers, Turning Challenges and Opportunities. And I'm there on the cover. I still had hair. That was last year, not too long ago. Not wearing a wig. My wife shaved it off during the COVID cuts. But this
Great.
is forward by Brian Tracy, Russell Gray, the real estate guys, NFL, NBA players, athletes. It's got a bunch of amazing stories on persistence, pivots, and game changers. It was an Amazon #1 bestseller. I'll happy to ship you a signed copy at investonmainstreet.com/book. And so we have that here. My wife, she has got a 70 video series you can subscribe to learn about. It's called 1 Minute to Cash Flow, like 2 minutes a day of little bits of tidbits to learn about how to passively invest. And then basically what we're doing right now is these two things, right? We've got multifamily, 4,000 units, 600 million, and we've got natural gas and oil portfolios, diversified income portfolios where you can invest in many wells in many locations, take tremendous tax advantages, and then ride what is right now the best inflation hedge is actually energy, direct oil and gas drilling. That is the best inflation hedge at this time. And so it's very critical. It's a very interesting point to take that plunge.
Awesome. Well, and I think that's a good, you said at this time, right? We don't know what the future holds. As we grow, we want to develop and build our foundation and be able to learn and pivot as things change, right? Because who knows where the future holds, right? Shoot, we didn't even know that tech was going to be around 30 years ago. So,
right.
At least the way it is, right? So, yeah. Anything you want to leave the and by the way, I want to get that book for myself. I want it go to investonmainstreet.com/book. Tell them that you heard about it from Wealth Wisdom FP, just because that, I don't know, I'm sure Patrick will want to know that you heard about it.
Yeah, promo code Wealth Wisdom. Just drop Wealth Wisdom as the promo code in there in the form.
Awesome.
Yeah,
Anything you want to leave anybody with or leave people with today?
Yeah, my wife and I are very happy to with where we've kind of grown the company, and we're excited about what the impact that our company has had on our investors. And I'm happy to chat with you wherever you're at in your journey and see if I can contribute to where you're headed, whether or not you're a potential investor or looking to just get some advice. Feel free to set up a call, and on our website and also on that book page, you'll be able to find a spot for that.
Awesome. And guys, you get to talk to somebody who's written for Forbes. I mean, I think that's pretty awesome. And really what I like is as we build our agency and as we are helping people, I want to be able to say, Patrick really knows this. You're really interested in this. You need to talk to Patrick. And we all like really it's connecting these things together. It's like doing that working as together, not just your financial advisor who's going to tell you just to put it in a 401k and hope and pray that it works. But take control of your own finances, talk to people like Patrick, like myself. But the main thing that I want you guys to hear is do your own math, do your own understanding, know your numbers, and then implement. Don't just sit there and say that it's eventually going to happen, but take little steps, and you will maybe take a step back. There's things that happen, but taking incremental steps forward is going to get you to wealth. And so whether it's wealth and money, finances, time, doesn't matter, but take control of your own financial future and step into that. So thanks again for being here, Patrick, and excited to do this live. I know I put you on the spot here, but hey,
No problem.
this is the way that's the way it works today, right? You gotta do this. Um, I don't know how it didn't happen like a year ago, but now everybody's doing lives. So thanks, Patrick, and you guys. Don't forget, break through to a smart, stable financial future. And don't forget to like, subscribe, and share this video with a friend and with your mom, anybody. Talk to you later.